Hey guys, I'm Anisha Gupta, and the crude oil prices for the year 2022 as well have started on a very volatile and bullish note. We're already trading above $80 per barrel, and we have seen 8% of gains in this year already. Well, the strength comes in on the back of the weakness in US dollar and short supplies from various areas. Also, when you look at the US inventories, they have declined for a 7th straight week as well. And then there is optimism that Omicron will not derail the economic growth recovery, and the strain will have a short impact on the global recovery. So that clearly has had the fund managers, money managers, all of them create long positions as far as the crude prices go. The other major impact could be coming in from the OPEC and allies. So while OPEC has been increasing 400,000 barrels per day for the last many months now, but the point is that OPEC compliance itself is much above 100%. That is because nearly 14 out of 18 OPEC members have not been able to produce as per the agreed quota. Also, it is much less than what they were supposed to deliver. That has been supportive. OPEC output overall also, when you look at for the month of December, was supposed to be 250,000 barrels per day. It was just about 70,000 barrels per day of an increase that they could put forth, so much short than what the street was expecting them to do. In 2021, we saw the crude oil prices gain up by 55%. This was on the back of vaccinations, the numbers that we saw around the globe, the pent-up demand that came into the markets, the production which could not catch up to the kind of demand growth that we suddenly saw. All of those factors led to price rises. The global production in this year is also expected to be slightly weaker than what we would be looking at in sense of demand. And that is exactly what the US government has put out in sense of numbers. For US, they expect the production growth estimate at 640,000 barrels per day, but the consumption is expected to be much higher at 840,000 barrels per day. The outlook 2022 is going to be a volatile one for sure, the way we have started. And while we have seen multi-year highs, all-time highs in sense of India when it comes to paying the prices at the pump, the street estimate is that this year as well could be volatile, and you could continue to be paying much higher prices for petrol, diesel and those furnace oils, etc. The demand is expected to surge above 100 million barrels per day, and the OPEC spare capacity by the end of this year is expected to be just about 2.5 million barrels per day as compared to 100 million barrels of a daily global demand. That is dangerously on the lower side. If there is a concern in the global markets, this one Q could keep the prices on the higher side. Also, the US output is estimated at around 11.85 million barrels per day for this year, which is slightly lower than the pre-pandemic levels, but definitely higher than the previous year there. The expectations are that you could be looking at the jet fuel demand also coming back into the markets, and even at this, there is this whole conversation about fossil fuels versus renewables. The feeling is that we still are a few years away from oil demand peaking, and the lower investments could really keep the prices higher here as well. And that's exactly what it mirrors when the global banks and brokerages put out their price forecast for 2022. Bank of America, for one, says that they're expecting $120 per barrel for crude by the month of June. Wells Fargo expects a super cycle in the oil markets going forward. Goldman Sachs says that the crude prices will hit a new record in 2022 or 23. But there are other banks like JP Morgan and Morgan Stanley who believe that the crude prices could be averaging anywhere between $82 to $88 on the higher side. And then you have a lone stander as Citi, which expects the year to start on a stronger note but to end on a much weaker note. Citi actually has forecasted the Brent prices to end the year at around $62 as an average for the fourth quarter. For the WTI prices, they expect the crude prices to go even lower at around higher 50s, so below $60 per barrel for that one. It really tells you that it is going to be a volatile year. The first half is expected to be on the higher side. After the summers, that is, you could be looking at supplies increasing, markets calming down, and that is when you could be looking at some consolidation or correction in the crude prices. So the year is clearly divided into half. The first half bullish, the second half consolidating to even some profit taking.